Question 1. What is a primary reason for including an inflation protection option in a long-term care insurance policy? A. To ensure that the policyholder's premiums remain stable over time. B. To allow the policyholder to pay lower premiums in the early years of the policy. C. To maintain the purchasing power of the benefit amount over time. D. To provide a guaranteed return of premium if the policy is never used. Answer: C. To maintain the purchasing power of the benefit amount over time. Explanation: inflation protection in long-term care insurance (LTCR) policies is crucial because it helps the insured maintain the purchasing power of their benefits as healthcare costs rise due to inflation. Without this option, the benefit amount may become insufficient to cover the actual cost of long-term care services, which typically increase over time. The Health Insurance Portability and Accountability Act (HIPAA) encourages the inclusion of such features to promote better consumer protections, ensuring that policyholders can adequately meet their care needs in the future. Question 2. Which of the following best describes the role of the Georgia Department of Insurance in relation to long-term care insurance? A. To provide direct financial assistance to policyholders who cannot afford premiums. B. To enforce compliance with federal and state regulations and protect consumer rights. C. To create and sell long-term care insurance policies directly to consumers. D. To regulate the prices of long-term care insurance premiums set by insurers. Answer: B. To enforce compliance with federal and state regulations and protect consumer rights. Explanation: the Georgia Department of Insurance is responsible for overseeing the insurance market within the state, including long-term care insurance. Its role includes ensuring that insurance companies comply with applicable state and federal regulations, such as the requirements set forth in the Omnibus Budget Reconciliation Act (OBRA) and the Health Insurance Portability and Accountability Act (HIPAA). The department also protects consumers by ensuring that policies are transparent and that companies adhere to ethical practices in their marketing and claims processes. Question 3, scenario-based. Mr. Thompson, a 67-year-old retiree, has recently been diagnosed with early-stage dementia. He is currently reviewing his long-term care insurance policy. The policy has a 90-day elimination period and a maximum daily benefit of $150. Mr. Thompson is concerned about his ability to meet the daily cost of care if he needs it soon. What should Mr. Thompson consider doing next? A. Immediately file a claim under his current policy as he believes he will need care soon. B. Look into options for additional riders or benefits to extend his coverage and lower his out-of-pocket costs. C. Cancel the current policy and seek a new one with a shorter elimination period and higher daily benefits. D. Wait to assess his care needs before making any decisions, as the policy may still meet his future needs. Answer: B. Look into options for additional riders or benefits to extend his coverage and lower his out-of-pocket costs. Explanation: given Mr. Thompson's recent diagnosis of early-stage dementia, he should actively consider modifying his long-term care insurance policy rather than filing a claim prematurely or cancelling his coverage altogether. Evaluating the possibility of adding riders such as a waiver of the elimination period or increasing the daily benefit amount can provide better protection against escalating long-term care costs. Policies typically have provisions allowing for adjustments, but it is crucial that he does this before his condition progresses to a point where he might face challenges in obtaining additional coverage or riders. This proactive approach aligns with the goal of ensuring comprehensive care coverage while managing his financial responsibilities effectively. Question 4. Which of the following statements accurately reflects the impact of the Health Insurance Portability and Accountability Act (HIPAA) on long-term care insurance? A. HIPAA prohibits insurers from denying coverage based on pre-existing conditions. B. HIPAA mandates that all long-term care insurance policies must offer inflation protection. C. HIPAA requires insurers to maintain the privacy and confidentiality of health information. D. HIPAA ensures that policyholders can switch insurers without any penalties. Answer: C. HIPAA requires insurers to maintain the privacy and confidentiality of health information. Explanation: HIPAA establishes standards for the protection of individuals' medical records and other personal health information. For long-term care insurance, this means that insurers must adhere to strict privacy regulations, ensuring that policyholders' health information is kept confidential. While HIPAA addresses several aspects of healthcare, it does not mandate coverage. Terms such as prohibiting denial based on pre-existing conditions or requiring inflation protection. Question 5. In long-term care insurance, what is the primary purpose of a non-forfeiture benefit? A. To allow the policyholder to convert the policy into a permanent life insurance policy. B. To ensure that the policyholder retains some value in the policy if it is surrendered or lapses. C. To provide a refund of premiums if the policyholder never uses the benefits. D. To increase the policy's benefit amount if the policyholder remains healthy. Answer. B. To ensure that the policyholder retains some value in the policy if it is surrendered or lapses. Explanation. A non-forfeiture benefit is designed to protect policyholders by providing some level of benefits even if they stop paying premiums or surrender their policy. This can take the form of a reduced paid-up policy or a cash surrender value, ensuring that individuals do not lose all value in their long-term care insurance if they can no longer afford payments. This feature is particularly important in addressing consumer concerns about financial loss in case of policy termination. Question 6. Which of the following is not a common eligibility requirement for long-term care insurance benefits? A. The insured must be unable to perform at least 2 activities of daily living adults. B. The insured must have a medical diagnosis of a chronic illness. C. The insured must meet the cognitive impairment standards set by the insurer. D. The insured must have coverage in place for at least 5 years before benefits can be accessed. Answer. D. The insured must have coverage in place for at least 5 years before benefits can be accessed. Explanation. While many long-term care insurance policies may have an elimination period, the period during which no benefits are paid, there is no universal requirement that coverage must be in place for a specific duration, such as 5 years, before benefits can be accessed. Most policies require the insured to meet certain conditions, such as being unable to perform a DLS or having cognitive impairments, but the duration of coverage before accessing benefits varies widely among policies and is not a standardized requirement. Question 7. What is the significance of an elimination period in a long-term care insurance policy? A. It determines the maximum amount the insurer will pay for services each day. B. It specifies the time frame in which the insured must wait before benefits become payable. C. It allows the insurer to increase premiums after the policyholder reaches a certain age. D. It defines the types of long-term care services covered under the policy. Answer. B. It specifies the time frame in which the insured must wait before benefits become payable. Explanation. The elimination period is the duration of time that the insured must wait before the long-term care insurance benefits become available. During this period, the insured is responsible for covering their own care expenses. This feature helps insurers manage risk and premium costs by reducing the number of claims they pay out immediately after the policy starts. The elimination period can vary from policy to policy, with common options being 30, 60, or 90 days. Question 8. Scenario-based. MS. Johnson is a 72-year-old retiree who is evaluating her long-term care insurance policy options. Her current policy includes a daily benefit of $200, a 60-day elimination period, and no inflation protection. After reviewing her finances and expected long-term care needs, she realizes that she may require care sooner rather than later due to a family history of health issues. What should MS. Johnson do to ensure she has adequate coverage? A. Maintain her current policy as it is sufficient to cover her needs. B. Contact her insurance agent to discuss options for adding inflation protection and increasing her daily benefit. C. Cancel her current policy and purchase a new one with a lower elimination period. D. Wait until she requires care to determine the best policy options available. Answer. B. Contact her insurance agent to discuss options for adding inflation protection and increasing her daily benefit. Explanation. Given MS. Johnson's concerns about potentially needing care in the near future and the rising costs associated with long-term care, it is prudent for her to seek modifications to her existing policy. Adding inflation protection and increasing her daily benefit amount can help her maintain adequate coverage as care costs rise. Waiting until she needs care may limit her options and increase her costs, especially if her health declines. Therefore, proactive adjustments to her policy are essential to safeguard against future care needs and ensure financial security. Question 9. Which factor is most likely to influence the premiums of a long-term care insurance policy? A. The insurer's annual profit margin. B. The policyholder's age at the time of application. C. The policyholder's preferred healthcare provider. D. The number of policyholders in the insurer's portfolio. Answer B. The policyholder's age at the time of application. Explanation. The age of the policyholder at the time of application is one of the most significant factors influencing long-term care insurance premiums. Generally, the older the applicant, the higher the premiums will be, as the risk of needing long-term care services increases with age. Insurers use actuarial tables to estimate the likelihood of claims, and younger applicants typically face low premium rates since they have a longer time horizon before potential claims. Other factors, such as health status and benefit choices, can also impact premiums, but age is a primary determinant. Question 10. In the context of long-term care insurance, what is a waiver of premium rider? A feature that allows the policyholder to skip premium payments during periods of hospitalization. B. A provision that refunds premiums paid if the insured passes away before using benefits. C. A clause that cancels the policyholder's obligation to pay premiums after benefits begin. D. A rider that automatically increases premium amounts each year based on inflation. Answer C. A clause that cancels the policyholder's obligation to pay premiums after benefits begin. Explanation. A waiver of premium rider is an important feature in long-term care insurance policies. It allows policyholders to stop making premium payments once they have been deemed eligible for benefits. This rider is crucial for individuals who may be facing significant financial burdens due to long-term care costs, as it alleviates the need to pay premiums while also receiving benefits. This feature is particularly beneficial for maintaining coverage without financial strain during times of need. Question 11. Which of the following scenarios would most likely qualify an individual for long-term care insurance benefits based on activities of daily living? Adults. A. An individual who requires assistance with mobility and eating but is independently managing personal hygiene. B. An individual who is capable of all AELS but has a diagnosis of early-stage dementia. C. An individual who can perform all ADLS but experiences frequent falls requiring supervision. D. An individual who needs help with bathing and dressing but can eat and manage toileting independently. Answer D. An individual who needs help with bathing and dressing but can eat and manage toileting independently. Explanation. To qualify for long-term care insurance benefits, most policies require that the insured must be unable to perform at least two of the activities of daily living adults independently. In this scenario, the individual needing help with bathing and dressing meets this criterion, indicating a need for assistance. Options A and C do not meet the threshold for adults, and while option B mentions dementia, the individual is still capable of performing all adults. Question 12. What is the primary objective of the Georgia Department of Insurance in regulating long-term care insurance? A. To promote the sale of long-term care insurance policies. B. To ensure that all insurers provide the same premium rates. C. To protect consumers by enforcing standards for policy terms and ensuring financial solvency of insurers. D. To mandate that insurers provide coverage to all applicants regardless of health status. Answer C. To protect consumers by enforcing standards for policy terms and ensuring financial solvency of insurers. Explanation. The Georgia Department of Insurance plays a vital role in consumer protection by regulating insurance companies to ensure they operate fairly and maintain sufficient financial resources to meet their obligations. This includes enforcing standards for policy provisions, ensuring that companies comply with consumer protection laws, and monitoring the financial health of insurers. The other options either do not reflect the department's role or misinterpret the regulatory framework. Question 13. When comparing long-term care insurance policies, what does inflation protection refer to? A. A clause that guarantees the insured's health will improve over time. B. A provision that increases benefit amounts to keep pace with rising costs of care. C. A feature that limits the insurer's liability for increased claims due to inflation. D. A policy option that guarantees the insured's premiums will not increase. Answer B. A provision that increases benefit amounts to keep pace with rising costs of care. Explanation. Inflation protection is a critical component of long-term care insurance that helps ensure the benefits provided by the policy will retain their purchasing power over time. This provision is particularly important given the rising costs associated with long-term care services. Policies may offer different levels of inflation protection, such as automatic increases at specified rates or options for periodic adjustments based on inflation indices. The other options do not accurately describe what inflation protection entails. Question 14. Which of the following best describes cognitive impairment in the context of long-term care insurance eligibility? A. A general decline in physical health that affects daily living. B. A documented diagnosis of a mental health condition. C. A condition that affects the insured's memory, reasoning, and ability to perform adults. D. A temporary inability to perform tasks due to stress or anxiety. Answer: C. A condition that affects the insured's memory, reasoning, and ability to perform adults. Explanation: Cognitive impairment refers to a decline in cognitive functions such as memory, reasoning, and decision-making, which can significantly impact an individual's ability to carry out activities of daily living adults. For long-term care insurance eligibility, insurers often require documentation of cognitive impairment as part of the assessment process. The other options misinterpret the definition and implications of cognitive impairment in relation to long-term care needs. Question 15. In the long-term care insurance claims process, what is the first step an insured must take to initiate a claim? A. Complete the required claim forms and submit them to the insurance company. B. Notify the insurance company of a potential claim within 30 days of the event. C. Provide a physician's statement verifying the need for long-term care. D. Wait for the insurance company to conduct an assessment of care needs. Answer A. Complete the required claim forms and submit them to the insurance company. Explanation: To initiate a claim for long-term care insurance benefits, the first step is to complete the necessary claim forms provided by the insurer. This step is crucial as it officially communicates the intent to file a claim and begins the claims review process. While notifying the insurer and obtaining a physician's statement are important components of the overall claims process, the completion and submission of claim forms is the foundational step that must occur first. Question 16, scenario-based. Mr. Smith has recently purchased a long-term care insurance policy that includes a 90-day elimination period. After fall, he is diagnosed with a condition requiring rehabilitation and long-term care. He has already undergone 30 days of rehabilitation in a skilled nursing facility. What should Mr. Smith be aware of regarding his benefits? A. He can start receiving benefits immediately since he has completed rehabilitation. B. He must complete the full 90-day elimination period before benefits are payable. C. He can claim benefits for the 30 days he spent in rehabilitation as part of the elimination period. D. He must wait another 60 days after leaving rehabilitation to access his benefits. Answer: B. He must complete the full 90-day elimination period before benefits are payable. Explanation: In long-term care insurance policies, the elimination period is the duration during which the policyholder must cover their own care expenses before benefits kick in. In Mr. Smith's case, he has only completed 30 days of rehabilitation. Therefore, he must complete the full 90-day elimination period before he is eligible to receive any benefits from his policy. Options A and C are incorrect because benefits are not paid during the elimination period, and option D incorrectly interprets the timeline regarding the elimination period. Question 17. What is the primary difference between individual and group long-term care insurance policies? A. Individual policies typically offer more comprehensive benefits than group policies. B. Group policies are more expensive than individual policies due to the larger risk pool. C. Individual policies are underwritten based on the individual's health, while group policies are not. D. Group policies usually have longer elimination periods than individual policies. Answer: C. Individual policies are underwritten based on the individual's health, while group policies are not. Explanation: A main distinction between individual and group long-term care insurance policies lies in the underwriting process. Individual policies require personal health assessments and are underwritten based on the applicant's health status and age, leading to potentially higher premiums for those with health issues. In contrast, group policies generally do not require health screenings and are offered to groups like employees of a company, resulting in more standardized benefits and premium rates. Options A, B, and D do not accurately capture the essential differences in the structure of these policies. Question 18. Which of the following accurately describes the role of the National Association of Insurance Commissioners (NAIC) in long-term care insurance? A. It directly regulates insurance companies and enforces insurance laws. B. It provides model legislation and guidance for states to develop insurance regulations. C. It sets the premium rates for long-term care insurance across all states. D. It offers consumer advocacy services for policyholders experiencing issues with their insurers. Answer: B. It provides model legislation and guidance for states to develop insurance regulations. Explanation: the NAIC is a collective organization of state insurance regulators that creates model laws and regulations to promote uniformity and effectiveness in the insurance industry, including long-term care insurance. While it plays a vital role in shaping regulatory frameworks, it does not have direct regulatory authority over insurance companies or set premium rates. Options A, C, and D inaccurately describe the NAIC's function and responsibilities. Question 19. Which of the following is an example of a situation where a long-term care insurance policy might provide coverage? A. An individual with a temporary illness recovering at home with no need for assistance. B. A person who has undergone surgery and requires physical therapy but is independent in daily activities. C. An elderly individual needing assistance with bathing and dressing due to chronic health conditions. D. A young adult with a minor injury who can perform all daily activities without help. Answer: C. An elderly individual needing assistance with bathing and dressing due to chronic health conditions. Explanation: long-term care insurance is designed to provide coverage for individuals who require assistance with activities of daily living adults due to chronic conditions or disabilities. In this case, option C describes an elderly individual who needs help with bathing and dressing, which are considered adults. Options A and D do not involve any need for assistance, while option B mentions physical therapy without a requirement for assistance in daily activities, which typically does not qualify for long-term care benefits. Question 20. What is typically the purpose of a benefit trigger a long-term care insurance policy? A. To specify the maximum amount of benefits payable under the policy. B. To define the conditions under which benefits become payable. C. To determine how long the benefit period will last. D. To establish the eligibility requirements for purchasing the policy. Answer: B. To define the conditions under which benefits become payable. Explanation: a benefit trigger a long-term care insurance policy is a critical provision that outlines the specific conditions that must be met for the insured to begin receiving benefits. This usually includes the inability to perform a certain number of ADLS or a diagnosis of cognitive impairment. It does not specify the maximum benefit amount, option A, the duration of benefits, option C, or eligibility for purchasing the policy, option D. Question 21. Which of the following terms refers to the time during which the insured must pay for their long-term care services before benefits from the insurance policy begin? A. Benefit period. B. Elimination period. C. Premium period. D. Coverage period. Answer: B. Elimination period. Explanation: the elimination period is the time frame specified in a long-term care insurance policy during which the insured is responsible for covering their own long-term care costs before the insurance benefits start. This period is essential for understanding the initial out-of-pocket expenses that the policyholder must manage before receiving financial assistance from their policy. The other options refer to different aspects of the insurance coverage. Question 22. An individual is shopping for long-term care insurance and notices that two policies offer similar benefits but different premium rates. What is one critical factor they should consider when evaluating these policies? A. The reputation of the insurance company. B. The maximum age for policy renewability. C. The length of the benefit waiting period. D. The insurance agent's commission structure. Answer A. The reputation of the insurance company. Explanation: while premium rates are important, the reputation of the insurance company is a critical factor to consider when selecting a long-term care insurance policy. A company with a strong financial rating and positive customer feedback is more likely to provide reliable service, process claims efficiently, and remain solvent over time. The maximum age for renewability, option B, and the length of the benefit waiting period, option C, are important, but they should be secondary to the overall stability and trustworthiness of the insurer. The insurance agent's commission structure, option D, is typically not a concern for the policyholder when evaluating policy value. Question 23, scenario-based. Mrs. Johnson has a long-term care insurance policy that covers care in a facility or at home. She prefers to receive care at home but is worried about the costs associated with in-home care. If she chooses home care, what should she confirm with her insurer? A. That the policy does not cover in-home care. B. that the insurer requires her to use specific home care providers. C. That there is no difference in benefit amounts for facility care versus home care. D. That the home care services provided are supervised by a licensed nurse. Answer C. That there is no difference in benefit amounts for facility care versus home care. Explanation. It is important for Mrs. Johnson to verify whether her long-term care insurance policy offers equal benefits for both in-home care and care in a facility. Some policies may have different benefit amounts or limitations based on the type of care received. Knowing this will help her make an informed decision regarding her preferred care setting without incurring unexpected out-of-pocket expenses. Options and B are not necessarily relevant to her preferences, while option D may or may not be a requirement depending on her specific policy. Question 24. If an applicant is denied coverage for long-term care insurance, which of the following is typically required of the insurer? A. To provide a detailed explanation for the denial. B. To automatically enroll the applicant in a high-risk pool. C. To refund any application fees immediately. D. To allow the applicant to appeal the decision without further review. Answer A. To provide a detailed explanation for the denial. Explanation. Insurers are generally required to provide a clear and detailed explanation for denying coverage when an applicant applies for long-term care insurance. This transparency helps applicants understand the reasons for denial, which may be based on their health status or other factors. The other options do not accurately reflect standard practices regarding insurance denials. Question 25. Which of the following is a key reason why an individual might choose a long-term care insurance policy with inflation protection? A. To minimize initial premium costs. B. To ensure that benefits keep pace with rising care costs over time. C. To limit the number of care providers to those approved by the insurer. D. To provide a fixed benefit amount regardless of future inflation rates. Answer B. To ensure that benefits keep pace with rising care costs over time. Explanation. Inflation protection is a crucial feature in long-term care insurance policies that allows for the adjustment of benefit amounts over time, ensuring that the value of benefits does not diminish due to inflation. This is particularly important in long-term care, where costs are expected to rise significantly over the years. Choosing a policy without inflation protection could leave policyholders underinsured when they need care, as the cost of care often increases faster than general inflation rates. Options A, C, and D do not address the purpose of inflation protection. Question 26. In which situation would an individual's long-term care insurance policy typically not cover the costs? A. When the insured is receiving care for a chronic condition that requires assistance with adults. B. When the care is provided by a family member who is not a licensed caregiver. C. When the policyholder is in a nursing facility after a hip replacement surgery. D. When the insured requires in-home care due to Alzheimer's disease. Answer B. When the care is provided by a family member who is not a licensed caregiver. Explanation. Most long-term care insurance policies require that care be provided by licensed or certified professionals to be eligible for coverage. If a family member provides care without appropriate qualifications, the costs may not be covered by the policy. Options A, C, and D describe situations where care is provided for qualifying conditions and settings that typically meet policy criteria. Question 27. What is the primary purpose of the buyer's guide in long-term care insurance? A. To outline the premium payment schedule for policyholders. B. To educate consumers on the features and benefits of long-term care insurance. C. To serve as a legal contract between the insurer and the insured. D. To provide a checklist of available insurers in the market. Answer B. To educate consumers on the features and benefits of long-term care insurance. Explanation. The buyer's guide is designed to help potential policyholders understand the various aspects of long-term care insurance, including policy features, benefits, and considerations they should make before purchasing. This guide promotes informed decision-making, ensuring that consumers are aware of their options and the implications of their choices. Options A, C, and D do not accurately represent the primary function of the buyer's guide. Question 28. If a long-term care insurance policyholder wishes to change their coverage or make adjustments to their policy, what is the recommended first step? A. Immediately file a claim for the changes. B. Review the policy's terms and conditions regarding modifications. C. Cancel the existing policy and apply for a new one. D. Contact the insurance agent for a recommendation on the changes. Answer. B. Review the policy's terms and conditions regarding modifications. Explanation. Before making any changes to a long-term care insurance policy, the policyholder should carefully review the terms and conditions to understand what modifications are permissible and the potential impacts on their coverage. This ensures that they are making informed decisions about their insurance and are aware of any limitations or requirements. Options and C might not be necessary and could lead to unnecessary complications, while option D is a step that could be taken after reviewing the policy. Question 29, scenario-based. Mr. Thompson has recently purchased a long-term care insurance policy. He is now facing health issues that limit his mobility and ability to perform daily tasks. He wishes to initiate a claim to receive benefits. What steps should Mr. Thompson take to ensure his claim is processed efficiently? Begin receiving care without informing his insurer, as benefits will be automatic. B. Collect all necessary documentation and submit the claim form to his insurer along with proof of care needs. C. Wait until he receives all care before notifying the insurer to show the extent of his needs. D. Only inform his insurer verbally about his situation without submitting any documentation. Answer. B. Collect all necessary documentation and submit the claim form to his insurer along with proof of care needs. Explanation. To initiate a claim effectively, Mr. Thompson should gather all required documentation, including medical records and evidence of care needs, and submit a completed claim form to his insurer. This step is crucial for the efficient processing of his claim and to ensure that he meets the insurer's requirements for benefits. Options and D. Do not follow proper procedures for claim submission, while option C may delay the process unnecessarily by waiting to demonstrate care needs. Question 30. Which of the following components is most critical when evaluating the long-term sustainability of a long-term care insurance policy? A. The number of available policy riders. B. The financial ratings and stability of the insurance company. C. The specific premium amounts listed in the policy. D. The average age of the policyholders in the insurance pool. Answer. B. The financial ratings and stability of the insurance company. Explanation. When assessing the long-term sustainability of a long-term care insurance policy, it is crucial to consider the financial strength and stability of the insurance company. A company with strong financial ratings is more likely to remain solvent and fulfill its obligations to policyholders over time, especially in a market where care costs are rising. While options A and C are relevant to policy features and option D may have implications, they do not hold the same weight in ensuring the insurer's ability to deliver on its promises.